Good afternoon. Welcome to Daily Currency Insight from the Currency Desk. On the starting of this week, the dollar has weakened against the rupee. We have seen some gains in the end finally against the dollar for the rupee. Last week, as we all saw, that rupee again posted a weekly loss, though on the final day it recovered a bit, but still it posted a weekly loss like the previous weeks. In the morning today, we saw the Asian markets opening downside and trading down in the morning session. This was mainly due to the bad economic data from the US front. In US front, we had two worsening data. One is the non-farm payroll and other is the ISM PMI manufacturing index. Both these data are indicative of a slowdown in the US. At the same time, what we are seeing is that the Federal Reserve was keeping a keen eye on the jobs scenario, and based on this job scenario, it would bring in the QE. So what has happened in the market currently is that the quantitative easing expectations have increased to a great extent. Now, alongside US, we can also expect the UK Bank of England and the Japanese Bank of Japan, all these central banks, to come up with QE. What is adding to the QE expectations is the fact that the US Federal Reserve has not come up with any move whatsoever in the recent few weeks. So we can very well expect a QE announcement from the US Federal Reserve. To support the rupee, what we also have is, for the first time since October 2011, the Brent crude price has fallen below $100. RBI has refused to consider a separate window for buying dollars for the oil importers. This comes in immediately after the rumors that oil importers were instructed to buy dollars from PSU banks and eliminate all positions with the other banks. In terms of the dollar against the rupee, we recommend a buy on dips, and 54.63 is considered as a ideal support level from wherein fresh buy positions can be taken up. In the EU front, we are seeing that there is a major depreciation in the euro against the dollar. This depreciation is also affecting the rate of euro against the Indian rupee. The focus from Greece exit from the eurozone has now shifted to the defaults of Spain and Italy. Spain and Italy are two of the major economies of the eurozone. So any cause of concern in these economies, or any chances of default and a collapse of these economies, would be a major worry for the eurozones. At the same time, what markets are looking at is the Greece being a small country, its default had a major effect on the eurozone. So Italy being the third largest economy in the eurozone, it would still have a major impact, even a greater impact than Greece. In terms of euro against INR, we suggest a buy above 69.50, which is a crucial resistance zone. UK markets are closed for trading today, and as said earlier, we could well have some quantitative easing measures announced by the Bank of England. Its trend against the INR, that is the pound's trend against the INR, is expected to remain sideways. If crucial support levels are breached, then we could well initiate a sell. The Bank of Japan has openly stated that it has failed to control the Japanese yen appreciation against the dollar. This is expected to be slightly positive for the Japanese yen against the dollar. At the same time, the safe haven demand is constantly increasing in the Japanese yen, even more so because we had negative data from the US front, and which was considered to be a big negative for the dollar also. The Japanese economy and the German economy are the only two economies showing slightly positive data for the markets. Hence, we could see further appreciation in the Japanese yen, not only against the dollar but also against the Indian rupee. At current levels, we recommend a buy on dips with an upside target of 73.55 in the spot levels. Thank you.